Today, Bitcoin tests the $28,000 level as crypto selling pressure continues. The SEC tells investors to be cautious about investing in crypto because they may not be following regulations. And PitchBook crypto analyst Robert Lay breaks down ChatGPT's positive and negative effects on the space. Welcome to CNBC's Crypto World. I'm Jordan Smith. The sell-off in the crypto market just keeps going, with Bitcoin floating right around $28,000 and Ether trading just above $1,900. Polygon's also facing a sell-off, dropping to $1.04. Looking out at the past 7 days, Bitcoin and Ether both dropped more than 7% as investors question the state of the economy and take some profits after the market's recent rally. All right, let's talk about those top stories. First up, after taking a huge loss last year, the Ontario Teachers' Pension Plan is reportedly giving up on crypto. The Financial Times reports that the OTPP will steer clear of the sector after the $190 billion fund was forced to write off a $95 million loss in FTX. That loss makes up less than 0.1% of the OTPP's assets, but Chief Executive Joe Taylor told the FT it was still working through exactly what happened and that it would be unwise to rush into another crypto investment. And here in the U.S., the Securities and Exchange Commission is warning investors to be cautious about investing in crypto assets. A new investor alert put out by the agency yesterday says that the risk of loss for individual investors who buy into the crypto space, quote, remains significant. The SEC also warns that those offering investments or services might not be complying with securities law. In particular, the agency warns that platforms that lend or stake crypto could be subject to securities law. Of course, as the SEC ramps up its pressure on the crypto industry, crypto firms and lawmakers are pushing for clearly defined rules. Just this week, SEC Chair Gary Gensler testified on Capitol Hill where he defended the agency's crypto crackdown. States are pushing ahead with their own crypto regulations in the wake of FTX. State lawmakers in the Texas House of Representatives just passed a bill that would tighten rules for crypto exchanges, including a ban on commingling of customer funds with the business's accounts and strict guidelines for reserves. Crypto exchanges would be required to maintain reserves, quote, in an amount sufficient to fulfill all obligations to digital asset customers. The legislation tries to address the mismanagement at FTX, as well as the cause of so many crypto companies' collapses last year, a lack of funds to handle customer withdrawals. The bill now moves to the Texas State Senate. All right, on to our main story. ChatGPT is becoming more and more popular. Many people have been turning to the language processing tool driven by AI technology to help with just about everything, writing emails, essays, and code. But is ChatGPT impacting crypto at all? Well, PitchBook's Robert Lay did some research on this, and he spoke with Crypto World's Talia Kaplan to break down his findings.
ChatGPT is all the rage right now, and it feels like everyone is talking about this artificial intelligence chatbot. Now, PitchBook recently looked into the impact of generative AI on tech, which includes crypto. And that's where you come in, given you're the crypto analyst at the research firm and cover the space in great detail. So what did you discover exactly? I reviewed your research and saw that ChatGPT can help simplify some of the complexities associated with crypto and blockchain technology. Can you take us through some of the ways ChatGPT can do that?
Yeah, so we think there's generative AI and ChatGPT is really exciting, and there's some good use cases for crypto. And right now, we think there's going to be some low-hanging fruits that's going to be applied and be used in the near term, and there's some long-term impacts of this technology in the crypto space as well. The first thing that we looked at is just the ability to use generative AI and ChatGPT for smart contract development and auditing. So you can think, smart contract programming languages are traditionally very complex, sophisticated, and they require a very high learning curve. So some of these programming languages like Solidity, Viper, and Move, it just takes a really long time for you to learn how to use it. But with ChatGPT, it can write code in any language. So we can think at, using ChatGPT, you can onboard more developers into Web3, which can help grow the space much faster. You can also use ChatGPT for auditing a code base, so you can use it to detect errors, vulnerabilities, and efficiencies in smart contracts by analyzing the code and providing suggestions for improvements. So that's kind of one of the use cases that we're seeing. Another one is for market analysis and trading. Generative AI and models like ChatGPT can be used to analyze market trends and sentiment from on-chain activities, social media, news, and other sources. So I want to step back a little bit. If you look at algorithmic trading, it's been used in traditional finance for 2 decades now, and it's been ported from TradFi into the crypto space over the last 5 years or so. So you see a lot of professional traders and hedge funds in the crypto space using these types of sophisticated trading strategies to really understand how to trade quickly, how to get in and out of positions. But the challenge is that it requires you to employ highly technical and quantitative people to build these complex mathematical models. But we see with ChatGPT, you can enable traders and investors who don't have the resources to build these complex trading and investment strategies to be able to use the technology to be able to do so. We saw some development last week with Falcon X. So they are using, they're an institutional crypto exchange and prime brokerage, and they are using OpenAI's tech stack to work on a chat box to be able to enable kind of like quantitative trading strategies. It's really still early. They've been working on it for a few months now. They named it Satoshi. And right now, what they're saying, it can be used by crypto traders to ask very simple questions like, which liquidity pool should I stake $1 million in to earn the highest yield? Or where can I purchase $2 million of uni tokens without having to pay 50 bips, for instance? So I think that's some of the use cases we see. There's a lot of other use cases across the ability to query a blockchain. We know that public blockchains like Bitcoin and Ethereum, they're open, they're transparent, but the ability to explore that data and extract valuable insights is still fairly difficult. There are providers out there like Etherscan and the Graph that enables you to be able to go in and search the data, but they're very complex to use. So we think ChatGPT can let users ask simple questions like on-chain activity, where trading is happening, where money is moving, or where capital is moving, and then ChatGPT can return an answer for that.
So, what are the potential negative implications or unintended consequences of ChatGPT on crypto?
Yeah, so for instance, right now, going back to the using ChatGPT for market analysis and trading, like the chatbots. Right now, ChatGPT is not real time, so you can't use it to trade right now because the crypto market is still a very volatile asset class and it's highly news driven and it runs 24/7. And so since ChatGPT is not real time, you won't be able to get all that news real time information. As you know, if Elon Musk tweets something and then moves something 5-10%, ChatGPT won't be able to capture that. So if you're using it for trading, I think that use case won't really be available until you can use generative AI and train that on real-time data. So traders can't rely on ChatGPT because it's still pretty risky to expect it to be able to build out a trading strategy that is sufficient when crypto moves way faster than what ChatGPT can return. I also think, and this is not unique to crypto, and this is just a general risk of this technology, is that we don't know what data ChatGPT and other generative AI models, what data they're using to train these models. So are they using data that is false, misleading? So you can think in crypto data, there's a lot of misinformation and false info out there. So if you take that info and you're using to train generative AI to build a trading strategy, you can imagine that would not work out very well. And so if people are relying on that trading strategy and not backtesting it well, you can lose money. And so what are some of the data that's being trained on? Is it even IP data? Are you infringing on copyright or anything like that, infringing on IP? So, we think crypto can help alleviate some of that as well. There are companies like Ocean Protocol who's been working on this for a very long time now, where this protocol helps anyone that needs access to data, reliable, good data, they can go on Ocean Protocol and buy that. And Ocean Protocol is a crypto protocol that it's like a marketplace for buying and selling data that you can use to train models like ChatGPT. So I think those are some of the main risks of the space related to the crypto space.
And we all know the crypto and Web3 space is full of scams and hacks. So does ChatGPT impact this at all?
I think the the way we see it is ChatGPT can actually amplify that because right now, like I said earlier, there's a lot of misinformation on this. You can imagine today there are some humans that are sitting there writing the misinformation and putting out on Twitter or Discord, but then ChatGPT can just automate misinformation, and so make it the volume of misinformation that gets pushed out into the internet or into social media to be much greater. So, I think using ChatGPT to put out false information to affect the price of crypto assets is going to be a big challenge. I think the other way is because ChatGPT can be used to audit code, but it can also be used to find those vulnerabilities. And if you were a hacker or you want to use it for nefarious purposes, you can use ChatGPT to find those vulnerabilities, and then before the developers or whoever's working on the protocols find those vulnerabilities, you can go in and then use that to either hack and take funds for yourself or anything like that.
All right, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.